Hey guys, it's your guy Trades once again here on this lesson module 1, lesson 2, which is all about mastering time frames. Before we go into market structure, I thought that this would be better for you to understand so that you're not confused when you open the charts and not understanding everything. So let's go into it. So we are saying a time frame represents the amount of time compressed into a single candlestick on your chart. Every candle provides a complete summary of price action, including the opening price, highest point, lowest point, and closing price that occur during a specific period of time. Okay, so let's try to dissect it here. So we are saying on the monthly chart, one candle, okay, takes a full month to form. It takes the full month to form. When we come here, okay, when you come here, let me try to use another chart maybe. Let me try to use this. Okay. When we come here, this is a monthly time frame. Okay, this is a monthly time frame. So it takes 1 month to form this one candle, one full month to form this one candle. This takes 30 days to form this because on the monthly time frame, this is the weekly, this is the daily, this is the 4 hour, this is the 1 hour, this is the 15 minutes, this is the 5 minute, 3 minute, 1 minute. We have many more down. As you can see, the seconds are here, the 2 minutes or the hour, they are all there. Okay. So we are saying uh, we are saying that this we are saying that this week on the weekly, it takes one full week to form that one candle. And this is majorly used for support and resistance identification to know which areas are going to act as your support in the market and which ones are going to act as your resistance zones within the market. So take note of this. It's going to help you so much later on, all right, for identifying key zones and areas of support and resistance or points of demand and supply. Okay, so we are saying on the daily time frame, one candle takes 1 day, and then it is used for identifying the market direction. Where will the market go? Where will the swings be? Okay, the swing low, the swing high, where will they be on the in the market on the daily time frame? And then the H4, whereby one candle represents 4 hours. The market structure and key zone, they are used for market structure and key zone refinement. After identifying your support and resistance, you come on the lower time frame on the H4 to identify the market structure. How is the market moving? And the key zone is refining your key zone. You have to refine it, like to try to modify to the easiest way possible. And then the H1 candle, thereby one candle takes 1 hour to form. And we are saying it is used for intraday structure context and set up the people who trade within the due course of that day, intraday traders. The one for the 15 minutes candle, it takes 15 minutes to form, okay? And it's for precision trade entry setup and execution. Some people take their trades on M15. Personally, sometimes also we take entries on M15 because there is reduced noise and there's no much confusion on the M15 time frame. And then you have the M15. Say one candle represents 5 minutes, which is fine-tuned entry triggers and for risk refinement. When you want to see how best you can minimize your risk, we use the M5 to refine that. And then we are saying the 1 minute candle takes 1 minute to form, and it's for scalpers, people who are doing scalping. Okay. So what are the time frame? Why are the time frames important? As you're saying, different time frames tell different parts of the same market story. So these are different time frames, but they're telling you, okay, different parts of the market story. Okay, what's happening at the highest peak, on the lowest peak, in the middle, in between the middle and the lower middle. That's what's happening. Okay, so we are saying that the higher time frame show the overall market direction, primary trend or the pro trend, the key trend, and major institutional areas of liquidity or liquidity zones, where to target your take profit overall, the long-term profit targets. They are on the higher time frame. Okay, as we shall see later on when we dive into understanding and mastering the module and the style of trading. So we have the lower time frames. So I think this show price entry, stop loss placement, and exit opportunity. So on the lower time frame, that's where you know where to enter from, where to exit from, where to put your stop loss, and so on. You are saying professional standards. Professional traders always begin their analysis on higher time frame. This helps them to do what we call the top-down analysis. If you have ever had it before, just in case you have already been trading before. So the top-down analysis, this is what we do as professional traders. That's why the higher time frame coming into the lower time frame to refine what will happen. Okay. So now if we look at this candle, this is a daily candle. This is a daily candle here. And this daily candle here, as we can see, it takes 6 4-hour candles to form one daily candle. This takes 1 day to form, and how many 4 hours are in one day? Okay, so we are saying 6 candles, or 6 times 4 hours equals 24 hours, which form up the daily time frame. And the 1 hour, it takes 24 candles to form one daily candle on the 1 hour chart, and on the 15 minutes takes 96 candles to form one day candlestick. We shall look at that later on. Don't get confused. It's not that complicated. The more your eyes get used to the charts, the more it becomes easier for you. Okay, so the next thing we are going to look at is the bullish and the bears. Okay, so we are saying every candlestick tells a story of the ongoing battle between buyers, which are the bulls, and the sellers, which are the bears. By examining the price levels established within the candle, traders determine who control the market during that time. So we are saying for the bullish candle, okay, it closes above where it opens. It closes higher than its opening. And this one shows that buyers are more stronger than sellers in the market. And the candle is always green. It's always green or blue. Some people use white. Okay. Then the price movement is always up, it's always going upward, not downward. We shall look at later on. So the bearish candle is always closes lower than its opening. Okay, it closes below than where it opens. It shows that the market is controlled by sellers, and then it's always typically red or black, depending on what the color the person wants to print. We shall look at all the things later on. I'll teach you everything. I said I'm going to teach you from basic to advanced. So the price is always moving downward, not upward. So the price is always on that downtrend. So this is an example of a bullish candle here. We can see it opened here, okay, came down, and then if you refer to our previous lesson, we said this is called the wick. And the wick or the shadow show that price came here, but it did not stay here. It left, then it came back and again hit, touched this point, and then left and came and closed here. And this is the body showing the momentum is strong. So this is the price open, which is the price where price starts. We have then the minimum price, the minimum point, the lowest point where price went, and then it came to the highest point where it reached and then came back and closed. So let's take an example. You are Mr. Jackson. Mr. Jackson or Jack starts his journey, okay, wants to leave maybe where he was staying at his friend's place, but before leaving, he has to come and say bye to his grandma. After saying bye to his grandma, he has to travel. But before he reaches where he's going, maybe to see his auntie, he has to come and greet his uncle here. Then after greeting his uncle, he has to come and settle at his destination. Simple as that. You can play back to understand the explanation, but that's how price moves. It opens, goes lower, moves high, and comes and closes here. I want you to rewatch this specific part that I'm explaining about the open and close very carefully, because it's very important in the strategy that we shall learn later on in the course. So the bear candle, we said it closes lower than it's open. So it opens here, which this is the starting point, and then it goes higher, which is the highest price point it reaches, comes lower, okay, which is the maximum, the minimum price level it reaches, and then closes here. So let's say Jack has finished visiting his people, and now he wants to go back to his place where he began from. You can say now Jaka starts his journey, but before starting his journey, comes to say he bye to his uncle, and then comes picks his luggage here, comes before now he drops his luggage to his home. He comes and greets his grandma here, and then comes back and settles at his place. So simple as that and as clear as that. That's how it works. Okay. What do candles reveal to traders? Beyond simple price movement, candles provide the rich insight into the market psychology. Okay, market strength and weakness. Like large bodies indicate strong conviction, tiny bodies indicate indecisions. If you don't know about this, you can refer to our previous lesson. Big bodies, they show that no, there is strong conviction. Buyers are reading to the market. And small bodies like the dojis show that they are not deciding. And then we are having the selling pressure or the buying pressure when you see the strong wicks. Okay, now when you refer to our previous lesson, the hammers and the spinning tops or the pin bars. Okay, so all those, they show rejection and pressure into the market. The long wick, okay, indicates selling rejection. Long lower wicks show buying support. So we shall look at this later on the charts. Momentum, consecutive large candles reflect the dominant market acceleration. If you see the same candles like this, 1, 2 long bullish candles, show that buyers are strong into the market. And if you see 1, 2, or 3 bearish candles, show that sellers are greatly into the market. So we shall look onto this. This is an example of a trading platform, which I'll look at later on. Now, if you have a computer, right? If you have a computer, or if you have your phone, I encourage you to go on Play Store and download what you call the trading. And if you have a laptop, watching this on the laptop, go to your Chrome or Google or Firefox or what's this though? You can go on your Chrome, you can go on your Firefox, or you can go on your Microsoft account. So you come here and add a new tab, and on that new tab you are going to put tradingview.com. Tradingview.com. So you are going to type with me tradingview.com. Okay, and then you are going to click enter. All right, you are going to click enter. Okay, so when you click enter, it's going to come like this. It's going to come like this. Okay, it's going to come like this. So you will need to sign in. There'll be a point of signing in here. Excuse me. There'll be a point of signing in here. So you're going to click here and sign in and put in your email address. So after putting in your email address, then it's going to bring you back to this. Okay, something like this. So when they bring something like this, you see there is a chart here. You can see there is a chart here. You can see these are charts here, what people are posting and all that, right? So after seeing something like this, you see also in the corner here what we call the watch list. Okay, you shall see here the watch list. Okay, so for your case, there are going to be many here. So you can click on any of the watch list. So you can see now they bring for you. I clicked on Nasdaq and you can see they have brought it here, Nasdaq. Okay, so what are we going to do? We are going to click on full chart. We are going to click on full chart. So we are going to click here on full chart. So we wait for a chart to open. So the chart is going to open like this. Okay, let me take you back. You are going to click on full chart. Okay, you can see mine, the program is still open, right? It's already open. So you can see full chart and it's going to open. They bring for you overview, and on the overview, that's where you click full chart, and then it's going to bring for you the clear chart. Okay, so now after clicking for the clear chart, this is where here there will be many, but if you don't want them, you are going to come here and delete most of them. You you can leave two. Okay, so after that you're going to click here, it goes back, you click here, it comes out, you click here, it goes back. So this one helps you take a screenshot if you want to download, if you want to copy the image, if you want to copy the link of the image, okay, if you have to open it in a new tab. This one helps you to put it on the full screen mode if you want to put it on screen mode, full screen mode. And if you have a laptop, if you press the ESC, which is the escape key, it brings you back. Okay, these are the settings in case you want to set your screen, the bodies, how you want to set them. And then now let's go back to our candles. So that's the major key point. So your chart won't come like mine. It won't come like mine. So that's why I want to first remove mine, and we see how we can make it look like mine. Okay, and we see how we can make it look like mine. So your chart may come like this. So you are going to come and click on the time frame that will be. It can be monthly, it can be daily, it can be 1 week, it can be 4 hours. You're going to click here, it can be 1 minute, anytime. You're going to click. So you are going now to start highlighting the time frames you want. You put them as your favorite. So you're going to click here, monthly, you need it. You need the weekly, you need the daily, okay? And then you need the H4 hour, you need the 1 hour, you need the 15 minutes, you need the 5 minutes, and you need a 1 minute or the 3 minutes, depending. And whatever you highlight, you can see it comes here. Okay. So right now, if we click on the monthly, you can see that this 1 hour candle here, you see. Let me check. This 1 hour this one candle, you see this monthly candle, it takes 1 month for it to form, and this one is going to take it. This is the month of August now, so we are going to take 1 month to completely form this candle, and this was July. Okay, so now if you come on the weekly, okay, let me first click on the monthly candle here. So we said it takes 1 full month for this 1 candle to form. So if you click here like this, okay, you can see you are inside this monthly candle. Okay, you are inside this monthly candle. The same if you put here, you can see you are inside this monthly candle. And if you come on the weekly, let's just set our chart, because we touch into another week. Okay, so it takes 4 candles for this to form. Okay, it takes 4 candles for this to form on the weekly. And if you come on the daily, it takes 30 candles. You can see now the candles tend to be many, right? Because now we are on the daily. Okay, so from monthly here, now we can see here it takes many candles to form the monthly candle. The area we spotted, you can see it's supposed to be 30 days to make the monthly, but then on the daily we know each candle here takes 1 day. Here each candle takes 1 day. This is 1 day, 2 days, 3 days, 4 days, 5 days, 6 days, 7 days, 8 days, like that. So here each candle is taking 1 day. Okay, for example, if I highlight this candle, so you can see it has touched into another daily candle, so you'll see the candles a bit more. Okay, so let's try to see here. Let's set our chart. So you can see, okay, on the daily candle, right? There on the daily candle it is 1 candle, but now if you come on the H4 candle, there are more than 1 candle. The same applies to now if it's so here on the 4-hour chart. If you go on the 4-hour chart, let's see. 1 candle takes 4 hours to form. It takes 4 hours to form. So this one candle takes 4 hours to form. Takes 4 hours to form, as you can see. This for our candles takes 4 hours to form. And then if you set here, each candle takes 1 hour to form. So how many hours? 1, 2, 3, 4. So we know that this, if we take 4, if we take this 1, 2, 3, 4, we are forming this one H4 candle. Okay. The reason why it touches into this because it cannot stay here. It needs price where to level very well. But you can see it is 1, 2, 3, 4 make up 1 for our candle. Okay. And then we have the 15 minutes. So one candle on the 15-minute chart. One candle on this 15-minute chart. Just a second. Let me do like this. One candle on this 15-minute chart takes 15 minutes to form. Okay. One candle takes 15 minutes to form because you're on the 15-minute chart. It takes 15 minutes to form. And now you can see we are on the 1 hour. 1, 2, 3, 4, 5, 6. So 6 15s are in 1 hour. So one here, it takes 6 candles to make 1 hour on the 15-minute time frame. But it takes 15 minutes here to form 1 hour candle on this time frame. And if you count the 5-minute chart here out, here, you see that this one, it takes 5 minutes to form 1 candle on this time frame. It takes 5 minutes to form 1 candle. And then if you come on the 1 minute, okay, let me use 3 minutes. If you come on the 3 minutes here, and the 3 minutes, it takes 3 minutes to form 1 candle here. It takes 3 minutes. And then similar to 1 hour, 1 minute, it takes 1 minute to form 1 candle on this time frame. It takes 1 minute from this. So you need to know this, to understand these basics. Okay, you know that if you come here, you know it takes 1 week to form 1 weekly candle. When you come on the H4, okay, you understand that now it's going to take for me 4 hours to form 1 candle. It's going to take you 4 hours to form 1 candle here. So that's it, guys. That's it. That's how simple it is, and that's how straight I can try to explain to you guys. And if you watch this lesson until the end, thank you for tuning in, and thank you for being committed into learning. Let's meet again in our next lesson, which shall be about market structure. Okay, shall be a market structure. So you can see here it takes 4 hour candles to form this 1 candle, right? So just like that, we shall look at market structure, okay, in our next lesson, which is a very key market structure and order flow. All right, but we shall start with market structure first, and it shall be a very amazing lesson. Don't miss it. Stay tuned. Catch up with the next lesson. I love you. Don't miss up. Bye bye for now. Until we meet again, revise, make some research, do some clear analysis. Okay. So you can see there's some key takeaways here. Students' homework assignment. All right. Complete the following practical tasks on your charting platform for proceeding to lesson 3. Instrument setup such as open the NAS 100 chart on your trading view, time frame, my time frame view. Take a screenshot of the NAS 100 on the daily time frame and another on the 15. Write 2 sentences comparing the trend visible on the detail. You can see that on the daily it can be 1 candle, and the lower time frame there are going to be many candles in a given direction. Candle identification on any 1 hour chart, identify and highlight 2 strong bullish candles and 2 strong bearish candles, label their highs and lows and their closes. So you draw levels, draw a horizontal line at the current major high and 1 trend line connecting the recent swings and lows on NAS 100. So guys, that's your homework. In case you watch this, you can do that as your homework. Let's catch up in the next lesson. I love you. Take care. Bye bye for now. Until we meet again, it's me, your guy, 8 trades